And the answer is simple. Hims broke my dick.
Today, we are talking about the men's wellness brand, Hims. I'm using the Hims non-prescription hair kits.
It is going to be Hims.
Where Hims
Hims and Hers rose quickly in the telehealth space, positioning itself as a disruptor in an increasingly fragmented healthcare industry. Its promise? Accessible and affordable solutions for millions, offering everything from hair loss treatments to mental health consultations with just a click of a button. But as with many fast-growing companies, the shiny exterior poses a deeper problems, one that may not be very easy to solve. The allure of modern healthcare is making it easier, cheaper, and more accessible for everyone. Doesn't telehealth, which removes the barriers of in-person visits, seem like a perfect answer? This is where cracks begin to show. Despite impressive growth, Hims & Hers faces looming challenges, regulatory scrutiny, controversial business practices, and fierce competition that threaten its future. Since June 2024, the company's stock has plummeted by nearly 50%. Investors are anxious over heightened regulatory oversight on the company's compounded drug offerings, as well as the growing competition from giants like Amazon and Eli Lilly. With Eli Lilly's Zepbound, a cheaper alternative to Hims & Hers, GLP-1 weight loss drugs, hitting the market, the company now faces serious questions about its ability to weather these competitive storms. Hims & Hers was founded in 2017 by Andrew Dudum, a tech entrepreneur with a vision to democratize healthcare by making it more accessible, particularly for often overlooked conditions like erectile dysfunction, hair loss, and mental health issues. His company was built on the idea that healthcare could be simplified and made more convenient by moving consultations online and offering medications delivered straight to consumers' doorsteps. Initially, this model worked. Hims & Hers rapidly scaled by offering discreet, easy-to-access treatments that many found embarrassing to discuss face-to-face with the doctors. But as the company grew and ventured into more complex areas like psychiatry, cracks in the model became more evident. Critics argue that telehealth consultations, while convenient, lack the nuance required for treating more serious health conditions like depression and anxiety. These conditions often demand continuous personalized care, which virtual consultations, especially those that follow streamlined automated processes, struggle to provide. Patients started to report that they didn't feel heard or supported by the platform's providers, raising concerns about whether Hims & Hers was trading quality for convenience. As the company continued to expand, these concerns only grew deeper. Was Hims & Hers truly democratizing healthcare, or was it merely offering a more accessible but diluted version of healthcare? The company's subscription-based model became the engine for its success. By 2024, Hims & Hers had amassed over 1.5 million active subscribers, a 40% increase year over year. With revenues climbing to over $270 million annually, the company seemed unstoppable. But controversies soon followed. The company's move into the weight loss market ignited fierce debates. By offering compounded GLP-1 drugs, Hims & Hers entered the highly competitive $100 billion weight loss market, which had previously been dominated by high-end medications like Wegovy and Ozempic. At 30 to 40% lower prices, Hims & Hers offering became an attractive option for many seeking weight loss treatments. Yet, these low prices came with regulatory risks. The FDA allows compounding under strict conditions, typically during drug shortages or when a medication needs to be tailored to a patient's specific needs. Critiques have pointed out that Hims & Hers may be exploiting regulatory loopholes, turning a practice designed for individual patients into a mass market product. Should the FDA clamp down on these practices, it could cost the company $100 million in annual revenue, severely damaging their bottom line. Hims & Hers' entry into the compounded drug market didn't go unnoticed by pharmaceutical giants. Both Novo Nordisk and Eli Lilly, the makers of Wegovy and Ozempic, have raised concerns about the safety of the compounded version of their drugs. The issue? These pharmaceutical heavyweights argue that the compounded drugs don't meet the rigorous safety standards of branded versions, putting patients at risk. In 2023, Novo Nordisk hinted at a potential legal action against companies offering compounded versions of their drugs. Hims & Hers, sensing the pressure, has already allocated $50 million for legal defenses and compliance improvements, knowing that any potential legal battle could have serious consequences. With the FDA increasing its scrutiny of compounded drugs, Hims & Hers faces an uncertain future. If the FDA tightens regulations or takes legal actions, the company could lose a significant chunk of their revenues, up to $100 million annually, and also suffer major reputational damage. Adding further fuel to the fire, in 2023, Spruce Point Capital, a well-known short seller, published a scathing report questioning Hims & Hers' long-term viability. The report pointed to declining customer retention rates, down from 75% to about 60%, and raised concerns over the company's reliance on low-margin products like compounded drugs. While the company boasted a 30% revenue growth in early 2024, Spruce Point Capital highlighted shrinking net margins, which had fallen from 15% to about 8% due to the soaring marketing and compliance costs. The report also emphasized the growing threat posed by competitors like Amazon and Walgreens, predicting that Hims & Hers' market share could decline by 10 to 15% in the coming years. For investors, this report was a wake-up call. What was once seen as a promising telehealth company suddenly looked like a bubble waiting to burst. The telehealth industry has become increasingly competitive, and Hims & Hers is now battling giants like Amazon, CVS, and Walgreens, each of which is expanding into virtual care markets. Amazon Care, for instance, offers telehealth services at 50% lower subscription rates than Hims & Hers, using its logistics network to provide faster and cheaper services. Likewise, CVS has invested over $1 billion into expanding its virtual healthcare services, leveraging its almost 10,000 nationwide locations to integrate telehealth with in-person services. For Hims & Hers, this escalating competition is leading to a price war it may not be able to win. The company already spends $100 billion annually on marketing, and with pressure mounting to reduce prices to stay competitive, its 8% profit margins are at serious risk of further erosion. Analysts are predicting that without significant cost reductions or price increases, the company's EBITDA could fall by 25% by the end of 2025. Hims & Hers has enjoyed a meteoric growth, emerging as a leader in the telehealth space. But now, with regulatory uncertainty, legal challenges, and fierce competition, the company faces a critical crossroad. Its reliance on compounded drugs and an expensive marketing-heavy model may spell trouble as larger competitors with deeper pockets step into the fray. Despite this, Hims & Hers has shown resilience. In May 2024, it introduced the compounded GLP-1 injections into the product portfolio, aiming to expand further into the weight loss sector. CEO Andrew Dudum remains committed to making healthcare accessible to underserved populations, emphasizing cost, location, and stigma as key areas of focus. He believes telemedicine can break down traditional barriers in healthcare, particularly in rural areas and medical deserts. With the stock value nearly down by 50% since June 2024, the real test of Hims & Hers' resilience has only begun. Can the company pivot and adapt its model, or will regulatory scrutiny and competition cause it to crumble in its own success? Only time will tell. Thank you for watching our video. If you found our look into Hims & Hers interesting, hit the like button and subscribe for more business deep dives. Make sure to tap the bell icon to stay updated on our latest video. Stay curious, stay safe, and I'll see you all in the next video. Bye for now.